Hello traders, and welcome to a new video on a Bitcoin price prediction. All right, let's get into it. What do I see in the market? First of all, for certain price points. Now, what I see is that we have a very interesting price point here. Now, why do I say that? Well, we have a market low here, and we have a market low here. Now, if price ever goes, or soon goes below these levels here, what I think is likely to occur is a massive drop. The reason I say that is any traders who have gone long and have not been liquidated yet may be liquidated around this price range. Also, this is the range low, meaning that many traders may have put their stop losses right below here and right below here as well. So if price goes below here, I'm expecting high volatility to the downside. What am I expecting to the upside? If price goes up and goes above 9,000, what I believe may occur is that this previous support is going to become future resistance, and we may also see a price formation where there's a stop loss hunt right above 9,000 to 9,100 something or 9,200 something, and then price goes back down in the short term. So what that would look like is if price first goes up, what we could see is something like that, and then something like this. And then what happens here could be price could rise or price could fall. But I think that this kind of pattern could occur if price does rise. So that's looking at basically me saying what is likely to occur if price goes above the range high or if price goes below the range low within this current range. Now we can go on a shorter time frame as well and go take a look at this. You can really see it here that we have low, low, and a low here. And really we also have the 7,600 psychological level and the 7,500 around price level, and if price does ever go below here, I'm expecting that drop. Now what we see here is we had a range here, and the market went up and then down. This was to trigger liquidity, momentum ignition, very likely, momentum ignition to the upside, momentum ignition to the downside, where we trigger stop losses, where we trigger liquidations, and then we reverse down here. Now, interesting, what ended up happening is two things that I see here. Previous resistance acted as support, and also we see a price point that goes just below 8,300 and then goes back up. What this may have done is any traders who had put their stop losses right below the round level of 8,300 had gotten those stop losses hit, price makes a wick, and price goes right back up. And now price is currently in a tight range. Now, what can order depth tell us about that current price point and whether price is more likely to go above range high or to go below range low? That's where we're going to get into vcdep.io here. All right, this guy needs to go away. Now, what you're looking at is the 5% MDR. I've talked about this many times, but this is a tracker of limit buys and limit sells, and it looks at which is more dominant. Are there more limit buys? Are there more limit sells within 5% of current market price? Now, typically, more often than not, what you're going to see is when there are more bids than asks, price rises. So when this is green, price tends to rise. When this is red, price tends to fall. There's a lot of spoofing in the cryptocurrency market, however, which can make this a little bit tougher. But what you can end up doing is you can segregate by different exchanges. Like if you wanted to just look at BitMEX, you could click derivatives. And, it's it's going to be all over the place. If you want to not have any, derivatives platforms or BitMEX, you could hit global, or you could even pick the exchanges that you want and aggregate their order depth by yourself. I could do everything but BitMEX by just unchecking that. But let's go back to global and let's look at 100%. The 100% does show something quite interesting. Now, what you're looking at here is of every single bid and every single ask in all order books on 100% of every single price, this is the supply and demand that we see. And you can actually see here that before the drop, we had very bearish, a very low MDR, as you can see here. And then we got a more positive MDR and price did rise, as you can see here. Now, what do we see at the current price point? Because that's why I went to this in the first place. I'm seeing a pretty bearish order depth, as you can see here. Price does look to be going a little bit higher right now in the 8,300s. However, I'm seeing a pretty strong, not very strong, but a decent amount of bearishness from the MDR. Now let's go more shorter term to the 5%. On the 5%, I also see this as well. It looks like we have a decent amount of offers. This doesn't mean price can't rise, but this would mean that if these offers remained, the price would have a harder time rising and an easier time falling because of the current order depth. If I look at the 1%, you can see that there as well. I don't love using the 1%. I do prefer the 5%. It is a bit better. So we have a pretty strong amount of bearish order depth. So with that, I wouldn't be surprised to see us to go a little bit lower. But if we do go higher, I think in the very short term, what could occur is something like this. On the daily chart, what I was talking about is price to do something like this, where it goes up to there and then goes there. That's a more medium-term prediction of mine. But in the very short term, or in the shorter term at least, I see previous support here that could become future resistance. So this wouldn't be shocking, something like this. That price goes back down to the range. Or if price is going to continue rising, what could end up happening is something like this. Price stalls at previous support, and then price does something like this. That's another thing that could potentially occur. But with this current bearish order depth, I would not be shocked to see price fall a bit. Now, if I go very short term, because I like to do 3 time frames, the daily, the hour, the 5-minute, you can pick whatever 3 time frames that you would like. It's just going to show you different amounts of data. We can see here that these lows have not been broken yet. None of these lows have been broken, really. So if price does go below here, it may have a quick drop. That would not be shocking to me. Either that quick drop is a bearish move that continues, or that quick drop is just a candlestick, a wick that goes low, and then price goes higher in a stop loss type of formation. So overall, with this picture, with everything that I've said, with what's going to happen if price goes to the range low on the daily, if price goes to the range high on the daily, I think overall in the short term, in the very short term, I'm leaning a little bit more bearish. In the medium term and long term, I am going to have to say I don't really know here, but what I do know in the medium term is what is likely to happen if price goes to certain price points. For example, if price goes here, then that could be a very quick drop, as it just triggers a ton of liquidity. And if price goes here, price may have a harder time rising because of all of this previous support. Previous support that becomes future resistance because any traders who might be holding unprofitable or underwater positions may want to take profit at break even. So anyone who had shorted here and is currently in profit, they may be more inclined to buy because they're in profit and close their positions, and they may not be inclined to close their positions if price goes above the point where they were previously profitable. So that would mean that there's a lot of buying, and then that buying stops at previous support. Now, the other reason that this can happen is any long, so anyone who had bought long and is currently holding an unprofitable position, if price does go up to previous support, those long positions may be inclined to sell, which could mean that there are a lot of potential sellers at that price point. So this combination of lack of buying once price goes a little bit above previous support and influx of selling, as many longs like to exit their positions at break even or slight profit, is going to mean that price might have a harder time rising past previous support. So that is a scenario that I could see, but again, we could test that previous support as resistance, go down a bit, and then continue rising. I think that what you need to pay attention to, of course, this is not financial advice in any way, I always have to just slide that one in, is look at patterns of order depth, as you can see here. And I will be honest with you guys, previously, order depth had been a lot more honest, I would say. What I mean by that is a few months back, or even a year back, when you looked at very bullish MDR, price would typically rise, very likely. When you see very bearish MDR, price just typically fell. But with a lot more spoofing and momentum ignition that's coming to the market, this is becoming a little bit tougher to read. So how do you take advantage of this? Well, if you want to take advantage of this and you still want to use order depth, what I'd recommend is go in the weekly, go in the monthly, go in the daily chart of Bitcoin. Look at order depth, look at different ranges. We can look at the 10%. And then also try these different metrics here. So hey, let's look at every single exchange pulled together by clicking that. See, what do we discern from this? And let's look at every single exchange on every single bid and offer everywhere, this is what we see. And what you need to do is try to find patterns in this. And if you think that there's a large amount of spoofing, then you could even do an anti-order depth type of strategy, where if you see a very negative MDR, you may even be thinking of buying. Now, that is a very aggressive strategy that I don't know if I would want to do, but it's these patterns that you need to look for in order depth that can reveal where price may go in the future. The reason I say that is because here we see a massively negative order depth that just, price rose. But I will have to say that this looked very much like a spoof, guys. I mean, MDR goes from negative 15% up to plus 0.21%. This massive jump in order depth is pretty bullish. So I wouldn't actually say that the MDR was lying to us. It really wasn't. The MDR went from very negative to slightly positive, which is a great sign to buy. And if you had seen this kind of formation, you could have bought and you could have made a decent amount of money. Another thing that we see here is, this is more shorter term, but order depth goes from plus 8%, I'm writing that there, to negative 16%. And what does price do? Price goes from 8.22K down to a low of 8.17K. Not a massive drop, but price does drop here. And then what we end up seeing here right before this price jump is, okay, this is constantly updating. Can I just make this guy not update? Thank you. We go from a very negative MDR of minus 10%, and then that jumps up to not a positive MDR, but it jumps up to negative 3%. So you can see here. So these patterns in order depth are really something you need to look out for. Again, when we saw this type of stop loss on formation, we go from a very positive MDR of plus 10% down to minus 12%. So it's not just the MDR that you want to look at. Hey, we have a positive MDR, or hey, we have a bearish negative MDR. What you need to look at is the change in MDR. And what does that change in MDR tell you about the change in supply demand of the market? What I recently saw is more bearish order depth coming in, which is telling me that we may see price go a little bit lower in the short term. But that's going to be it for this video. What we've talked about, just to recap so you guys remember, we talked about 3 different time frames: daily, 1 hour, 5 minute. On the daily, what I talked about is what's going to happen if price goes here. We are likely going to see a large wick to the downside or just a large bearish move, one of those two. Price may have some trouble going above these levels here because this is previous support, and that could become future resistance. If price does end up going higher, I would expect price to rise, to go sideways, and then continue. Prolonged consolidation at a previous support level that becomes resistance could break it. And on the hourly, we see we're currently at previous resistance here that became support. With that, happy trading, and let's see what happens.